Alibaba stock is back above $100. How long that will last, I don't know, but it's always nice to see Alibaba back here in triple digits. Right now it has a market cap of $228 billion and still a forward P of just 11.1 times. Now yes, it's true that if you were a shareholder of Alibaba for the last couple of years, well, you would have been down 9.3% in the last 3 years. In the last 5 years, you would be down still 50%. And as you know, I became an Alibaba and Pinduoduo shareholder at the end of 2024. I called it the Contrarian Trade for 2025, even when Donald Trump got elected. I just thought it didn't make any sense anymore. There's just going to be too much momentum and too much of a good deal to be found that eventually Wall Street will notice it and they'll just keep buying this stock on the way up. We've seen plenty of super investors, billionaires buying Chinese names, although some of them have been buying these names for quite a while, so they're still in the red. That's true. But the fears of, trade wars, Trump, this and that, to me just didn't make sense. I looked at what happened in 2016, 2017. Well, these companies did quite well. So yeah, I just thought it would be just too cheap to ignore. Now, today's video, I want to touch on what happened, right? Why is Alibaba suddenly at $100? Well, it has to do with another AI model. We've been talking about DeepSeek in the last couple of days. And by the way, with regards to DeepSeek, apparently the Chinese AI startup DeepSeek's chatbot achieved only 17% accuracy in delivering news and information in a NewsGuard audit that ranked it 10th out of 11 in a comparison with its Western competitors, including OpenAI's ChatGPT and Google Gemini. The chatbot repeated false claims 30% of the time and gave vague or not useful answers 53% of the time in response to news-related prompts, resulting in an 83% fail rate. Funny how these things turn out, right? On Monday it was Armageddon, doomsday scenarios for all big tech, American big tech companies and all of that. And then day after day, we get more news coming out that, well, DeepSeek is maybe not that great. American models can replicate the same results. Now it's coming out that, well, clearly the model is not great when it comes to accuracy. Not surprised. I highly suggest you go look at some people's posts when they try to challenge that chatbot and ask it some, well, difficult questions when it comes to China, the CCP, Taiwan, Hong Kong, and all of that. Anyways, Alibaba came out with something else. They announced Quen 2.5 Max. Maybe I'm pronouncing it incorrectly. Apologies for that. That's basically the red bar right here. You can see different criteria, different benchmarks. Arena Heart is a challenging benchmark. Then we've got here multitask language understanding proficiency, general purpose questioning and answering. Then you've got Live Code Bench, that's basically assessing coding capabilities. And then the last one here is Live Bench, which is just another coding benchmark. And as you can see, in almost all of them, it is outperforming DeepSeek, it's outperforming Llama, GPT-4o, and Claude 3.5. This, of course, is quite impressive, especially for Alibaba, and especially because, well, their cloud segment of the business has been growing quite quickly in the last couple of years. It's true that in the last couple of quarters, not by much, but we're going to talk about that in this video, and I'll explain again why I still think that companies like Alibaba, Pinduoduo, yes, they are Chinese companies, always risk attached to that. There's also risk attached to every other company on this planet, but I still think there is a lot of upside left this year or in the next one. So let's touch on that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So talking about Alibaba's cloud business, so the Cloud Intelligent Group, over the last 4 years, that has grown by 117.88%, or at a compound annual growth rate of 21.5%. Of course, as you can see, in the last couple of quarters, growth was a little bit slow. Last quarter, it did accelerate. When we look at the adjusted EBITDA for that segment, we can see an inflection point already here, September quarter of 2021. And since then, it has gone up quite rapidly. Of course, when you buy a business like Alibaba, you don't just get the cloud segment. It's a bit like Google, right? When you buy Google Alphabet, you don't just get Google Cloud, you get the advertising business, you get the search, YouTube, etc., etc. So here we've got the e-commerce side of things in China, which is their largest chunk of revenue, although it did peak back here in 2022. And then that was also one of the struggles of the company and the stock, that, well, that segment did not grow much because of competition, because of market conditions in China. So it was basically flat in the last 2 years. Then you also get Alibaba International Digital Commerce revenue that has grown at a compound annual growth rate of 28.1%. You also got Cainiao, the logistics network, Cloud Intelligence, of course, which is the yellow bars right here, and then Local Services Group. So yes, it's true, when you buy Alibaba today, the biggest chunk here of revenue, Taobao and Tmall, not really growing that much, still generating quite a significant amount of revenue and profits, but yeah, it's true, not growing that much, but you are getting other segments that are growing faster. The logistics network, the cloud, and especially the international markets, that's growing quite quickly. At the end of 2024, they announced that they continued to acquire more and more of their own shares. The repurchase amount was $1.3 billion. That's 15 million shares ADS, that is. And they still have $20.7 billion left in their share repurchase program, which is effective through March 2027. They also did some selling of their assets, investments. So there is one with regards to InTime. They announced that the company, together with another minority shareholder, has agreed to sell 100% of the equity interest in InTime to a consortium of purchasers comprising Younger Group and members of InTime's management team. InTime is one of the leading department store operators in the PRC. Alibaba currently holds approximately 99% of the equity interest in InTime. The expected gross proceeds to Alibaba from the InTime sale is approximately $1 billion, but they also expect to record losses of approximately $1.3 billion as a result of the sale of InTime. So when we're going to look at the upcoming earnings report, we will have to take that into consideration. They also announced this, so the disposal of the Alibaba sale shares in SunArt pursuant to the SPA. Same thing here, somebody's going to acquire a large majority of the shares, and then according to some rule there, that party will have to make an offer to buy all the rest of the shares. So it does seem like they're downsizing a little bit and focusing more on their core businesses, which of course is something that they've been trying to do, right? We've seen previous announcements, maybe some IPOs here and there, multiple leaders, CEOs, change of management and all of that. It was a mess. Let's be honest, it was a mess in the last 2 years. If you were an Alibaba shareholder, you didn't really know what was going on there. Management changes, Jack Ma disappearing, the economy not doing well. Oh, is it going to IPO? Is it not going to IPO? 6 new businesses. What's going on there? But now I think that the focus is quite clear. And I think that that's why the market is also liking it a little bit. Plus the announcement, the DeepSeek announcements, the AI race and all of that, their own announcement now, I think does push the stock a little bit higher. And to be honest, it doesn't really take that much to push a stock like Alibaba, which is still extremely cheap, a bit higher. I mean, it's still at 11 point something forward PE for a company like Alibaba. I mean, it's a joke. It's a joke. Of course, if it were an American company, it would probably be worth 2-3 times more, maybe even more, right? But it's not, it's a Chinese one. So right now, if we look at the stock on the weekly, we got a nice big green candle. This is the third green candle in a row, by the way, on a weekly, which means that we are now well above the 20, the 50 and the 200-day moving average, which got some solid momentum. Of course, we're going into the earnings report. And so if eventually we get even more good news from the report, from guidance, from commentary, yes, we could challenge the previous top here, the short-term top back at the start of October. This was after the, stimulus package news and all of that. The stock did go up quite rapidly. It did peak around 100, close to $120. I probably expect to see maybe some resistance there as well with everything going on. We had previous resistance here back in January of 2023. And so all in all, I'm still quite comfortable with my Chinese positions in 2025. It's just the start of the year. It's already a pretty good start. It's not huge positions because, still, we have to look at the risk here. Things can go wrong quite rapidly. A bad political statement, bam, things go, the wrong way. So I allocate it accordingly. But if things go well, it will have a pretty good impact on the portfolio, especially for 2025. So all in all, that's about it. What do you think? Let me know down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.